Right, this is a quick video on just me going through some back testing, and today I'll be focusing on the 1 minute time frame and price reactions around key levels, and I'll also be looking into the 1 minute time frame to spot reversal points, exhaustions and changes in market structure before you would, which sort of lets you zoom into these 1 hour candles and higher time frame candles and kind of spot the reversals of market structure before you usually would on a higher time frame. So first of all, 1 minute market structure is all relative to the 1 hour, the 4 hour, the daily, the weekly, the monthly. The only difference is the strength in the candles, because obviously the highest time frames like monthly and weekly have got lots of historical data behind them and a lot of candles within them and time, so obviously they are a lot stronger. But 1 minute does let you zoom into these intraday candles and really see why they've ended up reversing or continuing. So first I want to look at the reversal. Before I go, 1 second. Hi Grandad. I'm alright. I'm feeling old, yeah. I'm just in the middle of doing something, Grandad, but uh, um, no, I'm not. I was just doing something on my computer. Yeah, just come down whenever, Grandad. Half an hour's perfect. Cheers. Bye bye. See you soon. Bye bye. Right. So basically, we're going to look at first the 1 minute structure around the start of the reversal. So we had that strong daily candle down last week, the aggressive pullback, and then we, like I said on the previous video, we had that catalytic move and push to the upside after the Federal Reserve spoke and gave that dovish negative news. So this is what happened first. As you can see here, we start to zoom into the candles there. So through New York, see this orange, it's all the different sessions by the way, the colours. Through New York, start to see little bits of exhaustion, consolidation. As you can see, market structure is being respected. So it looks like at this point maybe it could continue. This could be the start of the reversal. Obviously the bias is still very bullish on gold, so these are areas where you could look for potential reversals. But as we can see here, if we zoom in, once we're in Asian and we get this closure below minor support, once we get that close below, we get the continuation of downside, a large spike to the downside, which ends up hitting that weekly level we were talking about. Hits the weekly level just 2 pips short of it, so it hits it, doesn't it? Hits the weekly level and then rejects off it. All that large downside spike is corrected, and then we find ourselves back in this consolidation, which it was starting to exhaust at. So from there, you could consider that a fake out, and if you've seen the rejections of the weekly level, you could think, all right, okay, we'll just reject it off a very strong level there, and this could be the reversal and the push to the upside. So as you can see again, this 1 minute lets you zoom into these candles and really see the respective market structure. So price goes back down to test this support, the consolidation again, and you can see as it gets to the bottom, you get these small, tiny bearish candles, and then that's another sign of exhaustion. Bearing in mind, we're at this previous support level and the range which it's gone back up into. You get that rejection around 7 o'clock. The hourly candle fails to close below again, and the hourly you'll be able to see that it doesn't close below as well, below these wick rejections to the left, and we get that push up. The hourly candle, as you're seeing a lot of moves now, really, you don't get sometimes on these hourly candles and 4 hours, and sometimes you will not get the bottom wick. It's like they try and catch you out from the move. The momentum just sets off. The momentum, and whoever's entering and pushing the markets, they're entering and not giving people the wick rejection opportunities. But anyway, so you can just sort of see the relationship between the 1 minute, and as we start to go from making lower highs to lower lows, we start making higher lows, higher highs, retesting old structure again, higher lows, and look, just before we get this new, that's, as you can see, that's the news kicking in, and we'll get onto the retest of the key level in a minute. But as you can see, throughout London, this area here starts being respected multiple times. So it's like we're getting into this top half of the consolidation, and we're failing to break back down and test the low area of this consolidation. So we're starting to form, in my eyes, we're starting to form bullish market structure in the top half of the range. And you can see, respected it 1, 2, 3, 4 times, and then eventually we get that the news coming in. This is literally this is when FOMC, the data comes out, and the Fed speak, and it just instantly just pushes to the upside. And I don't know if you've ever watched like Wix.ly or whatever, or just live price action in general, when people try and do NFPs or whatever. Like you seem to get that push to either side of the market, and then you'll get it will wick down quite a lot. Like if they'll be like, Raj, I'll be watching it on the 15 a minute or something, or whatever, and you'll see the wicks down. This is just from what you can see on here on the 1 minute. You can see the 1 minute candles go back down to retest the consolidation, just broke out of perfectly, and then form support above the key level. Perfect. Rejects off it twice again. 1 second. I'm just doing a webinar. I'm alright for anything. I'm fine. No, I'll be alright. I'm alright. Bring you back in a bit. Alright, see you in a bit. Yeah, so then we it's interesting, isn't it, how you can see the reactions to the key levels there. See, that's perfect. If I was at the markets there, I'd be taking that. You wick down into the consolidation, to break and retest of the consolidation, and you get the closure above the key level, respecting the key level. Also, the 30-minute closes outside the consolidation as well, which is nice. This is bullish. That's confirmation of closing outside the consolidation, and then you're getting the rejection, and then off you go. You can start scaling your trading then. Let's look at the and even when you're scaling the profits, like you can just see that the bulls are still in control. Right, you can see here, respected market structure. here, here. It's just pushing, chopping away up to the key level, and then once you get near, like next to the, this is probably around there, probably where you take profit really, because one, you're very close to the key level, the next key level anyway, and you form a double top here. Probably just think, I'll just take profit of this candle here, this bearish candle here, and then that'll be the right decision because you're just ranging and consolidating, ranging, and then here we go again today. You took your profit there, and you realised, right, okay, it's Friday. I've took my profit. I'm emotionally neutral now. I've not missed out or anything. I've not held it. I've not held my trade up here, and then watched me just gradually lose profits. And you'd probably be more fearful of re-entering at this key level if you'd held the trade, because you'd be pretty pissed off. You've lost quite a chunky profits, or you could have you entering emotionally. So zooming on this price action here, to be honest, it does look a little messy. But you can see that how it does respect the key level 1883. You have these closures below it, but obviously if you've got a bullish bias, you're not going to just switch your bias from a buy to a sell at this point. That'd just be gambling, wouldn't it? You've got areas of interest where you want to sell below, so obviously still very bullish on gold, and once we are getting closures below, we're still rejecting it and coming back up again, and then getting them 30-minute closures above the key level. So price consolidates around, but if you look at the bigger picture, look at it this way. So we have the corrective phase. See how we're getting the corrective phase, getting the lower highs, lower lows, and then look, ignore the noise. See what we're starting to see now. Higher lows, higher highs, and then another perfect. We get a 4-hour close. So this is the 10-hour candle, 10-hour candle, 10-hour, 4-hour, closes above the key level, and here you get your 4-hour wick down, and perfect closures above the key level. Signs of exhaustion, and then off we go. Higher high again, higher lows, higher highs. See this low, this deeper low it's done. Still respecting bullish market structure. Wicking below it, closing above. Idea is still valid. Stops at break even at this point. And you start scaling your buys, scaling your profits. And it's just got slow price action, but really starts, you even stop getting them deeper cut pullbacks. At this time here, you can just tell you're going to reach your next key levels, or with the way its price is respecting these lows here really well, continuously. I was looking at before. Yeah, it's just respected. Alright, and push. And now we're on to the next key level now. But I don't know if I'd necessarily be looking to take an entry right now at this time. It's 7 o'clock, aren't we? And we've had quite a big push already. I'd like to see entries around my trading times at pre-London and London, but I'm out for my birthday tomorrow, so I probably won't be trading anywhere. Just to see. So, not my idea, Kate. So, yeah. Yeah, I was thought I'd just show you the lower time frames, the 1 minute, and just the changes in market structure and how candle bodies, closures respect when they respect each other, and you can start to see the higher low, the market structure forming, the higher lows, lower highs, whatever. It's all relevant. Look at GJ as well today. So look at GJ, see what you could have caught. Yeah, GJ was a bit messy, but even here, this is a perfect example of like a double bottom, really, and like a strong sign of rejection and a reversal. So again, corrective phase, break and retest that key level. Pretty nice if you're willing to tap that. Like I said, I'm not willing to sell GJ unless we get below, I think it's for me, safe sells are below where I've got this level there, 153,500. 153,500 underneath the order block, and then you would be breaking the latest low, the higher low. You'd be breaking that and be breaking bullish market structure, and then closures are below 153. You'd have all this clean area to the left, clear area to the left to target. So that'd be safer sells for me on GJ. But back to the price action of today. So yeah, it's interesting, isn't it, how you get these laws being respected pretty much perfectly, and then we have that bullish market structure start to be formed. For fuck's sake. This today was probably like the cleanest move for me, but it does get quite messy at this point up here. So again, GJ was not the best to trade today, but there was trades to be had. There was a lot of noise to the left. So yeah, this is what I see. So again, yeah, on lower time frames, you start to see this bullish market structure being formed. You could have maybe entered on this candle there, and then once this is around 8 o'clock, you could have entered on there, but obviously I've got this sensitive price area to the left. Once you had that failure to close above it and this candle there, you could have got out or put stops at break even and got out of that trade because it wasn't ready to trade above 154,800 at that point. And if you look at, let's have a look at that 15-minute time frame or something. So yeah, not got closures above these sensitive price points on the 1 minute or on the 15 minute or anything. So that'll be an idea. You get the idea that earlier that yeah, it's not ready. It's not ready to trade above 154,800 yet. So we'll just watch price action and wait for better entries. And then yeah, you get the push down, don't you? I don't want anything, I'm in the middle of doing something. I don't, thank you. No. Right, bye. So yeah, sorry about that. So then if you're watching price action, you could be like, all right, okay, well, we're probably going to retest 154,800 at this point because we're failing to break any lower. We're consolidating, signs of exhaustion, start of that consolidation. Right, so we're going back up to 154,800. Let's see if we get any retest of the key level and potential entries. Again, another reaction to 154,800, but it's not ready yet. It's not ready to trade above it. Goes back down, retest again. There we go. See, now we are trading above it. We've had 12 o'clock. We had an hourly close above 154,800. Let's see. You could have potentially got in as you had closures above this minor resistance, and then watch price action accordingly, see if you get above these highs. But the better play, you could have got in at that point, and then let's see how you manage that trade. So let's say you get in this closure above here, stops below, 5 pip stop loss. If that bullish candle was to get engulfed and close below this minor resistance here, and you just get out, take a couple of pips loss, you wouldn't even let it get down here. You just get out of that, wait for better interest. So anyway, price did push up, you get your push up, and you manage price action accordingly here. So still valid. That's just quite nasty, really. Had you off. You could have maybe got out around there, but it's all well and good saying it in hindsight. It's still valid, but you do get a lot of smaller exhaustion candles. Sign of lack of volume, so maybe that'd be around there. You'd maybe close around here. Maybe after that candle, but it's all well and good saying it in hindsight, isn't it? But it's good to just look at this sort of price action and look out for it in the future. Anyways, you could have either closed if you brought the lows there, or if you would have waited for candles to close, you would have definitely probably got out at this point and just put stops at break even and just either took a small percentage or I got took out at break even. Anyway, so when we get this retest, then we get the retest. See, I wouldn't enter off this candle there because of the size difference. We have got a wick rejection of 154,800, but still it's a small bullish pin bar. It's not a strong enough candle in comparison to these bearish candles and the bearish momentum. So this would be too early of an entry, going off Capital Hunger's teachings as well. You wouldn't enter off that candle. That'd be quite aggressive. But yeah, this is a great sign to enter. At this point here, you have a bullish engulfing candle. It's engulfing the last two. You get this minor bearish candles. You get wick rejections of these minor support areas. Then you get in a closure above minor resistance, and you get in a bullish engulfing candle. So for me, it is the best entry. We're saying it in hindsight, in it, but going off price action as well, you can actually see why it was the best entry point. and it flies up a bit, stops at break even. At this point, you stops at break even. You could have maybe took a little bit of something if you wanted to, if you took, or at least put stops at break even once you got this candle here, rejecting off this market structure. But as you can see, it respects this minor support, minor old resistance and new support, respects it. Failures to close above, that's probably your best partial take profit point. Up here, you hit this tie, don't close above it. Yeah, I'm happy there. I'll take 80% of my trade and just let the rest run. Quite a messy price action. Consolidates around these areas, but you are respecting the laws and your bias is bullish, so you can step away from the charts and just watch it, and just not watch price action and just see if you get to your TP point, set an alert close to your key level, and then if you get any closures near it or reactions near it, just close the full trade. Or if you wasn't happy with it and you were happy with the consolidation, you started getting secondary closures below this high, you could just be happy just taking a 2-to-1 trade. You could have just took that. But yeah, trade idea is still valid if you've got the patience for it. Eventually, when it closes above, there you go, you get your bullish push to the upside, and I'd just probably be taking profit there. Happy days, thank you very much. And then yeah, once you get this closure below here, you want to be dipping, mate. If you get that closure below there, you want to be dipping. Well, when we get here, we start getting these smaller bullish candles. And a nasty rejection that. But yeah, not the best price action on GJ, but still moves to be had. I think during price action like this, I think the easiest players are obviously to just wait for the breakouts or the consolidations. They're the best moves. But if you do want to trade, then I think for me, if I do want to trade, then it's just best to get in and out of the market at these key level points, which are around between 20 and 30 pips between them, and just take your little piece of the pie and just get out, because the volume's clearly not great, and it's not really good. It's not. I feel sorry for someone trading on, I don't know, higher time frames anyway. So when price actions like this, and there was one more trade which could have took the key level. I think it's around here. It's sort of a double top, double bottom closure above. 30-minute candle closure above 154,800. Wick down. Wick rejections failing to close below 154,800. Bullish market structure starting to form. Double bottom. See how that bearish candle fails to close below here. Say if you was to take an entry here or here, then if you're watching the trade and you don't get closures, candle body closures below here, then your trade idea is still valid. Off it goes. If this candle here this 1 minute candle, if the next one would have failed to close above it, like I've been caught in these trades before, like I've had like a similar situation, and if you don't get that closure above the resistance in the next candle, you know that, and then you get another resistance form there, like a small bearish candle or a small bullish exhaustion that fails to close above these candle bodies, then I just need to get out and wait for better entries, because there's a good chance that you're gonna get a pullback towards your entry, or you're gonna go into drawdown, and you could probably just wait for better entries. So it's better to just get out. But once you do get that strong bullish candle closure above here, you can happily just carry on with your trade there, and then obviously just be looking at other sensitive price areas that it needs to get through. This would concern you a little bit, but you haven't had any closures, any bearish market structure formed yet, so your trade idea is still valid, and there's not enough pips on the table for you to take a partial there, in my opinion. So you just set break even maybe, or just ride the trade, and then if you had closures below this new support, then just get out when you start getting heavy bearish engulfing candles, because even though we have had 2 bearish candles here, it's not even engulfed this one bullish candle. So trade idea is still valid, and bullish momentum is still there. Then once you get that closure below here, like I said, once you get that closure below there, you get out. There was another thing here. Oh yeah, that's where I got my trend line from. It's tap here. Failure for the bearish correction phase to carry on. Strong bullish candles. See how it tried to break and retest the low, it had broken. It couldn't even push down past 5 pips. It couldn't even continue the downside by 5 pips. It just struggled, exhausted itself, and then we pushed up, slight rejections of it, and then pushed up. We're off to 154,800 there. Mainly price action over here. This is interesting. Look at that. Another double bottom. Failures to close below it convincingly anyway. Failures to close below the wick rejection. Double bottom. 3 wick rejections. Oh, it's just absolutely dog shit going in there, this price action. I wouldn't want to be involved in this. That'd probably be the trade for GJ, but like I said, it's not ideal, is it? You want moves you want strong bullish candles like that, continuation, not choppy price action. So this, I think, yeah, this was the one where it eventually gets to the next key level, but it's not pretty, is it? It's just interesting to watch price action and just how it's all relevant in all time frames. Still all structured on the 1 minute as well. Again, expecting break and retest. Failures to close above. Retraces back down. Closes above. Some more weird shit. Gets to 155 eventually, but yeah, It's not the best price action, is it? So what's interesting about, back to gold again, and before we was talking about how it hadn't broke, how it broke back into the consolidation and then failed to break below it again. Some people would admit, if you were trading on the 15-minute, you might be thinking, all right, okay, we've had a closure below this. These candle bodies here, we had a closure below it, and we could go back down and retest this low here. But if you look on the 1 minute, price hasn't broken these 1 minute areas, which are wick rejections. Price never broke the wicks, and that would have been why it hasn't gone back down, retested this low. Look on the 1 minute. So that's the wick rejections, the 1 minute candle bodies, and that's when it failed to close below it, and we had the bearish exhaustion candles and the signs of the bullish momentum and rejection there. And that was the start of the reversal, or the best entry point for the reversal on gold before the news was announced. So yeah, pretty interesting. I think the most interesting part was the gold technical, the 1 minute structure on gold, and the change of from it being a correction phase and the pullback, and just looking at price action and seeing on the 1 minute how it turns from bearish corrective structure to bullish market structure, and then just zooming into the candles and seeing the reversals, the break and retest in a lower time frame. That was something I've learned most today, back testing, and I do want to go and look at more reversal points, more reversal points like these, and look into the 1 minute and see if we can see any similar pattern. Like this is good. If you wanted to counter trend, you had the nuts to, then you can see a perfect rejection of key level 1912. What you'd see is just market structure as well. You'd see that price has tested the high, had its attempted push up, created the higher high, but failed to stay above. Sign of exhaustion. Push back down, failure to close back above and continue the bullish market structure, and the wick rejections of 1912. Failures to close below. Bullish exhaustion candle, failure to close above here, failure to close above here. And you can start getting that counter trend down. Although it does look a little bit messy on the 1 minute. That's counter trend there, isn't it? This is a nice one. But again, it's just, I say it's nice, it's just not at the minute, is it? The volume's dead. Like, you do get a reaction to 1902, but fucking hell. respecting of the laws, but wow, how long does it take? It's a long time to get there. Let's have a look at this. This is nice. Firstly, let's look at, oh shit. Right. So we get a wick rejection off 1883. We get the 15 and 30 minute and the hourly clause above previous resistance and new support. Probably a fib rejection that as well. Yeah. Rejects the 70.5 zone perfectly, pretty much on the second, on the new 30 minute and hourly open. So let's have a look on the 1 minute and see. Just have a look at the reversal points to see what we can see there. What's this? Yeah, that'd be that'd be very aggressive taking that. I wouldn't take that. But you can see. Hey, Grandma. You alright, Grandad? 1 minute. 1 minute, yeah? 1 minute. So, quite tough for entry points, really. You'd have to be very aggressive to take that. Bearing in mind you have had these strong bearish candles. Does respect the key level, but small candle bodies, and I would not be taking that. But you can start to see, although the move does happen pretty quick, you can see the respecting of minor resistance, the minor pullbacks and the respects and the closing above it continuously 1, 2, 3 times. I'd like that as an entry point, maybe. Just with the large wick rejection, the tiny candle body closure, or you'd maybe take it. You'd maybe take it after that bullish candle, with it engulfing this bullish candle there, and you'd have stops underneath these lows here. Capital Hungry always says as well, don't, like, you'd have your stop loss there for worst case scenario, or below if you wanted to, but always wait for candles to close. That's something Capital Hungry preaches, and this is a prime example why you'd be shitting yourself watching this go down and just crash down, but it's just simply a liquidity grab, trying to scare out any potential buyers on the reversal. But once you get that wick rejection here, your trade is obviously still valid. You've closed above these minor support levels, and when you get this strong bullish candle, this would be the idea, yeah. So you see this, I'd probably enter off that candle there, because you've had the wick rejections of the key level. It's also a key higher time frame level, recent high, break and retest, fib level, blah blah. Right, that's too aggressive. Wait for the double bottom. You get it. but then I'd enter probably either there or here. If I hadn't entered there, I'd imagine it would be here. So the reason why is because you're failing to close below here. You can see a switch in momentum. And you get the candle body, bullish candle body closure above this minor resistance, and then, like I said, you shit your pants for a minute, but you don't never close on candle close. You never close the trade on before the candle, until the candle closes. Sorry, can I couldn't get that out? Until the candle body closes. Obviously, you have your stop loss. So if it gets your stop loss gets hit, then it fucking gets hit, doesn't it? It's just nature of the beast. So just happens, innit? But you don't close your trade mid candle because you've done that. Happy days. The trade's still valid here, and then again you see that wick rejection. Rejects off the support, off it goes. Once you get the candle body's closures above here, you're at the races. You're at the races, mate. When you see that candle body closure, you're like, yeah, buzzing. Fucking. Then you're watching this area. See how it respects recent market structure. This area. This area. I love watching these reactions, to be fair. It does interest me. So you've had this big push up, and naturally you just get a retracement, don't you? You've had your, this is your, where's your close? 30 minutes close there. Ah, okay, right, okay. So this is, that's the start of the new 30-minute candle. So I wouldn't enter on that because you're anticipating a wick down. You're anticipating a 30-minute wick down. So this is perfect. You're getting that wick down, which you anticipated, and then you're seeing that bearish, seeing that big wick rejection, tiny bearish candle. I'd probably just enter off that if it breaks the high. If it pulls down here and starts breaking that high, I'm just going to enter. And then I'd close it if we'd failed to close above here. I'd close the trade if we failed to close above here, because I'm anticipating that if we failed to close above here, we're going to get a deeper pullback and probably a double bottom down here, or worst case, or whatever, or it could just continue down, continue the corrective structure. So if you didn't get that bullish candle body close above here, then I'd be getting out, not taking it, waiting for better opportunities, because in my view, price is not ready to push up there. So then you're getting these successive bullish candles, and this is fine because I'm getting a pullback. This is fine though, because look at the bearish candles. Price moves in wave, doesn't it? You know what I mean? Nothing's just going to fly up to the moon. Sometimes it does, and that's beautiful. But trade idea is still valid. Look at the size of this bullish candle, and look at how many bearish candles it took to engulf that candle. So for me, bulls are still in momentum. Bulls momentum's still there. We're still bullish. We get support here. Well, although it's minor support, still you're seeing it respecting. You have stops at break even at this point anyway. Or you could even take a percentage there if you've seen the closure below this minor support, minor resistance. You could be like, alright, okay, I'm happy just taking 50% or something, or whatever, or putting it break even. Anyway, so it pulls back, and then we get that bullish candle starting to engulf the bearish pullback, and then again watching price accordingly. Now this is interesting as well. It's giving you clues that even though we're forming a double top, look at the size of the bearish candles. Look at how weak they are. Like if we were getting a proper rejection, then we'd have strong bearish candles closing below here, below this support here. So you start getting strong bearish candles closing below this support here, and you got below there, you probably that you're going back to entry, so you probably just close it and take your small bit of profit. But look at how weak the bearish candles are. Do you know what I mean? Compared to these candles. So for me, that would not bother me. I'm like, alright, look how weak it is. Gets broken, pushes up, weak rejection candle again at the support. So again, I'm not convinced that is it. Push up. Then we're just following bullish market structure. Pushed up, closed above it. Then this is a new 15-minute candle. Pushes up a little bit. First forms its bottom wick already, pushed up a little bit, then forms its real bottom wick. Retest the bullish market structure. And yeah, eventually we get there. I think once you took a little piece of it, this is something I need to do more as well. It's probably just set, if you have an higher time frame bias, a target in mind, just take your piece of the pie, take your small percentage, so you've got no FOMO or whatever, you've banked something from the trade, set it at break even once you know you've pulled away from your area of interest, and you know that when you've got up with A, like, right, okay, if it goes back towards entry, I'm not interested. I don't want to be in that trade anymore. Do you know what I mean? If anything, if it gets back and it's not ready to go yet, and then you start seeing double bottoms formed here, then you could re-enter. You could re-enter there. Do you know what I mean? So you could even set it at break even, and then just not even watch this. Just let it go. Just let it go, and then just say you take TP a couple of pips short from the key level or something, just so you're not being shelled maybe or whatever, and just leave it. Just let the trade run. That's if you're not taking a proper scalp and you've got a bigger pip target in mind. So yeah, that's how I would have took that trade. Hopefully. It's all well good saying it in hindsight, but I think the more you practice, the best ways of taking the trade, and then you're putting it into, then you're executing in real markets. Obviously, it's all well and good. Like I say, it's all well and good saying, but this is the best way or whatever. And there were times where you don't do it the way you should do, but the more you practice it and just understand why moves have happened, and understanding the best ways to take the moves, I think in the long stead you'll get where you want to be with it, and that's what I do with me. It's what I'm trying to do. So I'm going to keep doing this. Just going back testing. I won't be trading much recently, but I'll be back testing the days when I'm not at the charts, and just watching reactions to key levels and areas of interest, and figuring out the best ways to taking the moves, and understanding why the moves worked out and why they wouldn't have worked out, when trade ideas are invalid and when they are valid. And it's all relative with this lower time frame market structure. Again, I'll go for it again, but you can see it clearly. High highs, lower lows, high highs, lower lows, high highs, lower lows. Thank you very much. But this noise could maybe scare you in between it. But hey, look, you get that strong push down, but doesn't break the old support. So if you just look at the bigger picture, high high, lower low, high high, lower low, high high, lower low, high high, you get TTP. Right, I'm gonna have to go. My grandma and granddad are here, but I'll get this uploaded and sent to you.